Good evening, everybody. This is Chrissy from SolsticeATR and Vulcan Capital Research. I just want to say I was out of town for a week. Unfortunately, what did you guys do to this market? We had a down week all week last week. But I just wanted to say I am proud of my nephew. He graduated from West Point as a lieutenant, and I'm happy to get to see him graduate from over there. I'm back in town, back to business, to the daily activities I usually do, which are trading. Just want to call this video, is there a change in the trend due to this volatility move down from the sanctions in Iran to Middle East, the oil sector, the Saudis, the China area, between the Philippines, the Malaysian islands, Taiwan islands, and the China Sea. There's a little bit of electricity due to the oils in that area. As well, there's the tariff between us and China, United States, Canada, as well as Mexico and South America. On Friday, Donald Trump tweeted that there's going to be an increase of 5% tariff on Mexico due to the people crossing the borders. It caused a down day Thursday night through Friday, tried to look back up, couldn't make it, and eventually failed and closed at the 2752 area, the S&P 500. Here I'm showing the weekly chart on the S&P, the Nasdaq, the Russell, and the Dow Jones Industrial Average. I just want you to understand, guys, this is a weekly bar, 1 week representation. We've got 1, 2, 3, 4 weeks as a whole moved down. The whole month was basically a down move. We hit the 61.8. We lost the 18 SMA and the 50 simple moving average. If we don't hold the 61.8, we may head down as far as the 50% fib, but I'm looking halfway through the 50% fib and the consolidation of this area before we took off higher. Can we go higher? Possibility. Let's go look at the daily chart. I just want to show you guys the gap in the charts, so that way you understand every time we had a gap, we usually revisit those gaps. There's a gap here in the chart. If you can see it, we went up, there was a gap here, we eventually revisited. There's a gap here. On the way down, we revisited those empty space in those gaps, which were eventually filled. Now on the way down, we have all these empty gaps here. I marked them with an oval between these two candles and this one here. We have a gap between here and up here. We have a gap due to the the push down. We haven't been able to fill the gap. And on Friday, if you notice, the lower this candle is 36,526, let's call it, and the high of this candle is 36,477. We basically touched it. So more or less this candle's filled, but we have this gap here and this gap here. If the market's going to continue, we have lost the 61.8 fib on the daily channel. Do we hold the advanced decline line DMI crossings, which are between the 15 all the way up to 40 directional in the favor of the bears? Since we crossed the ADX at 15, we went higher and continued. The DMI is getting to 40. Are we a little bit too overextended the whole month since we had a down move? Do we come back halfway and come back in, or do we continue fall through the ADX DMI, hit halfway through that candle, which is that consolidation gap fill in this area, and bounce back to the backside of this channel, eventually come halfway, consolidate, continue higher, or retrace back down? Let's see what the market gives us next week. Remember, this is the first month out of the year. Once again, we have had a down month. What I'm going to do here is now go over each instrument one by one. Let's take a look at the E-mini contract. SolsticeATR/ES, which is the small mini index S&P 500. If we take a look at the S&P 500, we are heading lower as well, similar way, and it's inside those two channels. Since we lost the 116 SMA as well as the 200, if you look at last week's video, I had an oval here right on the 116 SMA and 200. I said, watch if there's going to be consolidation here, and do we reach it? We actually reached it. We're still looking for the downside of this channel. The 61.8 is still, a little bit below us, and we have the ADX DMI crossing. You can see that red and blue dash line. If I take the Fibonacci out of the way, it would show it, but I'm going to leave it there. So this is going to be an area. 2712 is a very critical area to hold. If we don't hold, eventually we'll head to the 2668, 2652, where I would be initiating a long position myself ahead of the 50 Fibonacci retracement from the 100% all the way down to the 23,016.75. That's your 50 fib, that's your 61, that's your 38, that's your 23, and that's your 78% fib. But I think there's going to be a potential buy in that area because there's a gap in the volume profile, and what I'll do, I'll show it to you guys on the daily chart and how to use it. Let's go look at the NASDAQ NQ, NASDAQ 100. It's in a similar situation. It's still got the 61.8 right above it. We touched the 116 SMA. We have lost the 200 SMA. We had an oval here. I just moved it to the right. The ADX DMI, if we lose this channel in the 61.8, our ADX DMI crossing that red dash line is about 6900, 6910 area. Keep an eye on that area if this holds, or your 50% fib. Usually on a daily chart, usually the 50% fib is usually a buyable for a bounce back up. But I'm not suggesting that we can go there. If the things do change, we may come up back to the upside of this channel where I have this oval. Let's take a look at the Dow Jones Industrial Average, YM, which only represent 30 companies in the United States, /YM. And the Dow Jones Industrial Average is in a similar situation as the NASDAQ. As you can see, we can see that it's coming down. It had lost the 61.8. It has lost its ADX DMI. It's a little bit weaker. Do we touch this channel, or do we touch the ADX DMI from the prior high when it pushed up, consolidated, which is that oval here, and bounce back up, or do we fall through it and continue to the 50 fib? Let's take a look at the Russell /RTY. And if you noticed in the Russell, the small cap has been the weakest. When we looked up above the, the 1600, we were not able to hold it and eventually fell through. This was this side, the consolidation. There was a consolidation between, the 1520 area and 1585 area, or 90, you can call it, and eventually we fell through it. It's still in the down channel. If you notice, I had this, down channel drawn here. Do we continue lower to the 38.2 fib and eventually get a bounce, or do we bounce off the backside of this channel? And that will coincide, with these candles down here. So this is how I'm looking at it. If there is a change in trend, I would look for the 38.2 in the NASDAQ in the Russell at 1440 area to see if I can get a bounce, or the 1425 to get back to the long side, backside of this channel. I think that, because since it's wedging, tighter and tighter, eventually you'll get a responsive buy at the 38.2. Let's go back to the S&P 500. And what I want to do is break it down a little bit more in detail for you guys. That way you can see what I'm looking at. Let's take a look at it. We're in a down channel, like we said. In the SPX or the NASDAQ, you'll see those gaps. I'm going to put the SPX before I switch it to SPX, which is the big contract on the Fortune 500 company, which everybody follows, or the SPY. And if you noticed here, I'll show you the gaps where they are. This is why I have them marked. If you notice, this is the 1800 and this is the 1835, 1840 area. There's that gap between these candles and these ones, and there's this gap here, which we couldn't clear, the 27.99. We couldn't get to the 2800. We didn't get to 2804.50. In order to continue higher, we have to get back, clear that, and clear the 23% fib in order, the 28, 23 area, in order to continue higher and come back to the 38.2 and the 61.8 area, which is up here. But due to this, this down move the whole month, we had consolidate one down month. They tried to push back up the second week, couldn't get it up, came back, fell through the third week, fourth week down. Do we continue to the backside of this channel, eventually hit the 38.2? This one, the 38.2, is actually the 61.8. If you draw inversely the chart, it usually is the opposite. If you draw from bottom to top or top to bottom, this one's drawn inversely from, top to bottom, and this is why we have the 38 here instead of the 61. And I have my ADX DMI crossing at 2710. You can see it. That's a big area here in the SPX. Let's take a look at the ES and break it down in volume. TOS has a very good volume profile. There's a lot of other carriers that do different ways of looking at monkey bars, volume profile, price action and volume, total volume, and the gaps. So you can come here to style. Instead of looking at the candles, what you can do is use the monkey bars. This is something very simple. It will show you where the most POC is, where the value area high is, where the value area low, where most price action has closed relative to the POC. So if you notice, this is the whole year. We had the prior low 23.1675 and a high 29.61 quarter. You can take the highs and lows, draw a Fibonacci retracement. You know where your 50% is. You know your 61 or 38, depends how you draw it, or your 38, your 23 and 78%. On Friday, we closed at 27.52. You can see it, and the close of this candle at the 4 o'clock was 27.52 and a half. So I always look at the 4:15 close. Do we come back and clear the 82.78, 82 area to come back to 27.92 area, 2800 to 2804? If we can clear that and come back to the 23, we eventually become more bullish. If we stay underneath it, the only gap that I see below the 27.15, 23, if we hold this area, we can come back up because that's your 61.8. But if we fall through it, what I'd like to see is the 26.68 area or the 72. I'm going to call it 26.72 area to the 26.52 area. This is, let's call it 26.62 area and 26.72 area. This is the area where I would initiate along before the 50% Fibonacci. If we lose that, your first bet is your 50. If you lost, you go for the 38 for the large one to go long. My recommendation, if we fall through the 23 and 15 and we don't get a bounce here, look for the 68.72 area to the 62 area to get a bounce back up. And this is why I'm letting you look at the monkey bars. It'll tell you where most volume profile is the minimum. If you combine this volume profile with this one on an annual chart, if you notice, here is low volume in this area. So basically, this is the bigger area where we can fall through. I'm not saying we can get there, but that's a bigger area for us to look for and consider along at the 38.2. But at this point, I don't see it happening. I see it happening between the 15 to 23, 27.15 to 27.23. If not, the 672 to 62. 52 max is my area for a long position in the S&P 500 for at least a bounce back to the 2747 area. Okay, So that's it from us at Solstice ATR and Balkan Capital Research. You can subscribe to us. This weekly video is always offered for you for free. Do check the box. At the same time, if you like it, hit the like button. And if you'd like to join us in our own chat room, we do have a live chat room which monitors the S&P, the NASDAQ, the oil sectors, gold, the bond and equities and options. We are actively trading live there in the chat room. Remember, we are not professional advisors, or do we recommend buying or selling. We are trying to educate you how to use the instrument for your benefits to make money in the market.